Okay. What more did you find out about the accounting thing? That like certification?
The CDFM.
Yeah.
Well, I just found out that like Big Four is not necessary.
Okay.
So practice test, multiple choice.
Did it have to be spaced out, or you don't know that much yet? Did anyone follow up with you, or did you follow up with anyone?
Yeah.
Yeah.
He says that he wanted me to change my resume a little bit and then make it more tailored for the government.
Sure.
And then to his
That sounds like good news, right? I'd say. Hello, sir. How are you doing? What year are you this year? I was trying to think of that, and I didn't want to look it up. Do you got fun plans for December and January? Not yet. I'm not asking you to do a long road trip with me if that's what you're thinking. I'm not going to do a weird. No, I'm recruiting for that CFA Research Challenge competition.
Definitely interested in that.
Good. Okay. You think you'd be interested this year?
Yeah.
Perfect. Excellent. Come on, line. We got 2 of our 3 now. So our other person so far is Cash. Do you know Cash? He's what is he? Accounting and finance and econ. He's like a, I don't know what you call those people, like triple threats. Okay, so I'll remind everyone because I'm pretty bad at it. And remembering that kind of thing. But let me start actually before I get to that. So for everyone's presentations for the economic outlook, again, the presentations were all very strong. 2 or 3 of you sent me emails saying that you felt like personally, like you felt self-conscious. You know, like I don't know if that was as good as it needed to be. But seriously, everyone's actually was good. Everyone's had a strong set of slides to it. Everyone had a weak point to it, but that's to be expected. Remember that. So it's not like I don't know. But everyone's so everyone's got a score at this point. I just want to write out comments. Then I'll scan things and send it out to everyone. But everyone did well enough that when it came to my point of like, what do I want to waste class time on? Do I want to waste class time on now giving you a take-home exam? Generally, I like exams. I'm a big pro-exam kind of person. But it goes back actually to the point you did of like saying, are we following the syllabus? I mean, again, 2 things I just wanted you to do this whole course, because we're now getting to the month and a half left, basically, maybe close to 2 months. What are you going to get out of this class? And I said I wanted 2 things out of it. One thing was being able to work with data to analyze the economy, which is what this presentation basically showed. So I don't know, like I could give you a fictitious economy and make you do the data, but I'm not sure what the point of that exercise is. You've already done it once. All you're doing is replicating what you've done already. I appreciate the fact that each of you had different ways of understanding the same phenomenon, because that is basically the way that it works in reality. It's different ways to look at the same phenomenon. I'm happy with what we have. No one is failing this class in that regard, so we're pretty good. So with that said, I want to spend the rest of our time, actually we're about the halfway point for this semester. I want to spend the rest of the time doing now specific companies and industries. So the transitioning of this comes to the second goal. It's going to consume all of our time. We're not going to have anywhere near enough time to do it all. If we were to look at 1 year into the future, this course is going to look different 1 year into the future because the certificate forming a certificate around financial economics, which would be, for instance, the thing we're going to try to do over the next month is going to be a course called we're going to have a fair course on financial economics. We'll have the terminals to do it all. Obviously, right now we don't. But we've got we have the money to do it now. We were given a space, D254 upstairs, but I sat in long meetings today hearing about how difficult it is to get electricity to classrooms. I should become an electrical engineer, is what I'm learning.
That sounds really bad.
Apparently, this, I don't know what it means. Apparently, this classroom has 2 breakers to it. I don't know what breakers. I'm assuming that's the thing that they flip back and forth. Apparently, this classroom only has, or a classroom like upstairs only has 2 of them, but you need 10 of them. But each building is only allocated like, each building is only allocated like 15 or 20. So basically, the thing we wanted to do is heating up electricity. So that's the one exception is that one. That one has 10 breakers devoted to it because they designed the building around the food lab. We're trying to change the classroom into a lab. Apparently, physically you can do, but electrically you cannot. So for me, they are, but someone, I was a kind university citizen and gave it to cyber, what are the cyber people or cybersecurity? Yeah, that's cybersecurity people. They're getting it because creative media is moving out. We were given kind of an option for it, but I think the cyber people need it more than I need it. So I'm gonna wait my turn. But I was gonna meeting later today. I think we're gonna get there's this like fancy computer lab in the building.
One of the doors that are always closed.
Yeah. So I think we're gonna get that one. It's really, really expensive. You might actually have to know that would be pretty nice, yeah. But we'll see. Anyway, there's a point to having the, I keep saying about talking about these terminals, and you might be thinking, well, what does that really mean? And this is my lead up to our beginning part of our discussion here.
So we'll learn terminals in 254. It's not going to happen due to a lack of breakers.
Yeah, it's not going to be in, well, someone said, well, maybe we could do it, but it would use up your entire grant you were given by the federal government just to put more electricity in the room. Apparently, this is not the only time something like this has happened. In UH, they wanted to build an auditorium on a floodplain. So apparently, like, people wanting to do something, it's never, but again, these are the, so they have these like specialized keyboards so that you never have to use a mouse to basically do everything. But the way that these look are screens like this. So this is a little bit about what I want to lead into today to talk about. So the focus of these next 2 months, well, less than 2 months, would be how do we, does this say computers for virgins? Like, why would you title it that? I'm not a prude. I'm just saying, like, whatever. I'm not gonna wordsmith it. How do we value a company? There's basically going to be 2 ways that we value a company. But any company is valued. There is fundamental analysis and there is technical analysis. These are the only 2 ways. And we've talked about this a little bit before with WeWork. So how would WeWork have been valued? So WeWork would have been valued, so I'm saying that as a question that has to answer that. With the fundamental analysis, what you're doing is you're saying like, oh, look at these dividends. Oh, look at this new product they have coming out. Look at what their competitor is doing. let's go look in their warehouse and see what's all looking in there. Let's talk to their suppliers and see what kind of troubles they're having fulfilling orders. How many orders you got coming in? Are workers grumpy about something? So fundamental analysis basically means you're like fact finding, you're doing things to figure out like, oh, I think that I think that Michelle doesn't know this one piece of news. I know this piece of news. She's going to be dumb and buy the stock. And in fact, the reality is that there's this piece of data she didn't know about or wasn't willing to pay for. So I'm gonna do something, right? I'm gonna sell the stock, or I'm gonna basically screw her over, and she's gonna be dumb and buy the stock because an internet stock is on the web. Right? So fundamental analysis, again, you're looking at the basics of the company, and you think that some people are dumb, some people are smart, and dumb people lose, and smart people win. Now, that's not the only way you would approach this. In fact, a single company is going to do this, is going to use both forms of analysis. When I say a company, a bank, a stock fund, an investor, a hedge fund. Because the other side of this is the technical analysis. What the technical analysis says is that all the prices take in all the information. So basically, no one is dumb and no one is smart because all the information is basically known. And the market efficiently prices in all of the known information. So there's no like fake price where everyone but one person knows the right story, and I, as me knowing the right story, can screw everyone over. It's basically presumed everyone knows everything. Everything is known. So the only way you make money from a technical analysis standpoint is that you predict the future based on what has happened in the past, essentially. That I could see that, so the one, let me show you this here. Let me, as an example of this, because a lot of today is going to be about technical analysis. So I want to spend a little bit more time on technical analysis. If you like this kind of stuff, you can watch it on TV every day, called Options Action on CNBC. We'll talk about options a little bit, but the big news is Amazon. They had their quarterly earnings report. Let's see here. And I think I watched a little bit. Yeah, this is the one for Procter & Gamble.
Through the AT&T network, edge-to-edge intelligence gives you the power to see every corner of your growing business. From using feedback to input, to introducing products faster, to managing website inventory, and more, giving you a nice big edge to your competition. That's the power of edge-to-edge intelligence.
We've got a slew of earnings on deck this week. One big name gearing up to report tomorrow is Procter & Gamble. The consumer staples heavyweights on pace for its best year since 1997. While a big run has cooled off a bit this month, options traders are betting the rally isn't over yet. Let's get to Bonawyn Ellison, Managing Director of Equity Derivatives at XP Investments.
So here's what we're trying to do, right? So the idea was that before the Procter & Gamble's earnings come out, what you try to do is say, how have they typically performed after an announcement was made, let's say at the same quarter last year? How did the market react to that? Because the past is basically known 100%. So how can I make a future prediction based on past events? And that's what we're going to see in this relatively short clip here.
So to break down the options
This
action.
is a very eager young man. Ready to sell it.
So yes, taking a look at the weekly options, you can see that the at the money straddle is implying about a 4% move.
Man, that's
That's
really
in
does
line with
not
what we've seen over the last 2 years. So I would say options are pretty fairly priced. Let's take a deeper dive. Now, this sticks out to me. If you look at call and put volume for the month, you can see that call.
So we're going to get into these calls and puts, what this basically means. But basically, this is the way that I would put into action what I think the future price is going to be, right? If I think that Procter & Gamble is going to rise in the future, I'm going to engage in an options trade. If I think it's going to fall in the future, I'm going to engage in an options trade. So I'm basically going to make a bet like you would in Vegas. And I'm saying basically, I think P&G is doing really well, so I'm going to buy an option. I think it's going to do really bad. So a classic one has always been Tesla. Tesla, everyone has kept thinking they're not going to meet their orders and the share price is going to fall. So in fact, it's one of the larger
Calls
ones.
outstrip puts 2.5 to 3 times to 1. That's significant. It seems like there's some real bullish sentiment coming into earnings here, which is interesting because taking a look.
So the and I should have said this as well. So the puts are giving you the option to sell it at a future point in time at a certain price. The calls are giving you that right to buy it at a future certain price. So basically, what's P&G selling at right now? P&G I think is in the 90s, if I'm not mistaken, or was in the 90s. I think 80s, 90s. Basically, I could say to someone, let's just say it's 90, and I thought it was going to rise dramatically in the future. Then I could say something like, I'll pay you $91. I want to buy a right to buy it from you at $91 a share 2 weeks from now, right? And I'm going to buy it from someone who thinks it's going to fall, right? Because they're like, dude, it's gonna be cheaper price. But I want that because if I think it's going to rise to like $100 a share, I've now got this ticket that basically says I have a right to buy it at 91 a share or 92 a share. You buy these typically in boxes of 100. I'm going to talk more about all this, but
Look at this next chart. You can see that there is a long.
So when he was saying here, there were more calls than puts. That basically meant that more people thought it was going to rise in price than it was going to fall in price. So let's just rewind that just so that you can get that sense here of this. Again, we're only doing this.
Long-term uptrend here. I want to focus on this place right here. We're kind of testing the lower bound of that uptrend. It'll be interesting to see what.
This is a classic way you start to think of a technical analysis. You start to create things like more technical things like candlesticks and whatnot. But oh shit, man! Yeah, look at the price. I'm even quoting you a price that's not even a month ago, and that's what it was. Yeah, what's that call? Right, but basically, you could have bought something here, right, and said, "Oh, I think it's going to go up," right? So you would have done. At that point, you would have made your call option, and you would have said, "I'm going to buy it at 81 a share." It rose to 120 something a share, and now you could have bought the shares at $80 a share. Right, so that's how you basically make a bet. Now you have to pay for that right to buy it at a certain price. So obviously the bet you make can go bad. In that case, you then just have to pay for that option that you paid for. But sometimes people that do technical analysis are called chartists because they look at charts. Yeah, it'd be like if your grandfather was a technical analyst. Today, people use processing power and they run things through computers. And they kind of like you did with how do you predict the unemployment rate next quarter or the quarter after, right? Not that they're doing it in Google Sheets, but they're forecasting the price based on previous information, which you could imagine you could throw in all the share prices into Google spreadsheet, right? And you can make a forecasted price. I would hope you'd do something more.
Whether we hold trend and bounce, or if that stock rolls over and sells off. There's two things that come to mind. A couple ways to play this. If you compare Procter & Gamble to the XLP, the consumer staple ETF of which PG is 16%, you can see that focusing again right here, this spread, sorry, I guess my drawing skills aren't working today. This spread right here, this is at pretty significant statistical highs, meaning that XLP looks cheap versus PG. Taking that a step further, take a look at SKU for PG. Procter & Gamble SKU is cheap. So how do you play this? Why is this actionable? Well, there's a couple ways I like to play it. Selling put spreads or selling 1x2 put spreads. In either case, you're going to sell the at the money or thereabout put and buy one in the case of the 1x1 or 2 downside puts. Both situations will protect you if that stock does roll over. And the 1x2, you'll actually start to realize some profitability if that stock continues to sell off. Now, to add another layer to this, I also like overlaying either one of those strategies with the sell of an upside call. And I typically do not like recommending the sale of naked calls, but I'm comfortable here and I'll tell you why.
It doesn't matter why I think so. But what you can basically, again, kind of see what's happening here. He's trying to make he's basically trying to make a prediction of how the Procter & Gamble share price is going to change in the future using what's called an ETF, which is an exchange traded fund, which is basically a pool of assets all organized around a similar topic. So there's one, for instance, for pet care, pet food, and whatnot. So if you do want to just buy shares of Chewy, right, which is the pet food internet company, and I say I don't want to just throw my risk into just one company, I could buy this ETF and my risk is spread across everything in the pet care business. If I don't want to buy a single airline, I can buy an ETF that has the ticker symbol of JETS, which goes across airline manufacturers, the airlines, et cetera, et cetera. So there's these themed ETFs, but then there's also ETFs that are even more broadly based, which is the one that many of you have probably heard of, which would be something like an S&P 500 index fund or an ETF, right? Which would just be, it basically tracks the value of everything. It's what's called passive management, meaning things are happening and I'm not trying to make more money than the market, I'm just trying to match what the market's making. So if we look here, what's all going on here? So options action would be the one, but the other one that some of you have probably heard of or seen before would be the yelling guy.
But Apple's management just come back. And last night, Katie, you read the terrific tech analyst at Morgan Stanley, shocked Wall Street with a gigantic price target boost.
So I don't know. This guy, Jim Cramer, he kind of blends two things. He does technical analysis, but he also blends it with fundamental analysis, which is why he's a bit more popular because usually, again, a person doesn't just rely on one strategy or another. Usually what they're trying to do is they're trying to look at the charts, and then you get to a point where you just kind of like take a hunch. Like, you know, most of the time the data is kind of like split either way. You just gotta be like, you know, shit or get off the pot, right? You gotta figure out what you're gonna do. And that's when you add to it the fundamental analysis. Now, sometimes this guy is really wrong. Like, you know, he's good friends with every CEO. Every CEO always thinks their company is the greatest. So the person comes on, they say their company is great, and they lie to this guy, and this guy then says, oh yeah, it's a great company. And then he gets like blindsided. So a classic example with that would be, let's see if this is on here.
What is that candlestick? What is the candlestick in regards to a chart?
Yeah, so the candlestick would be things like, so the candlesticks would be, once you start to create charts, you're trying to see the deviation across and how much volume you have across those price spreads. So then what you're trying to do is, and we're going to look at some of these candlesticks as well, but what you're trying to do is determine then the right point at which to get in. Like, how do you actually determine what we're going to call the strike price? What price would I actually pick of 80 or 90 or et cetera, et cetera. Let's look at this one here. This is a good classic. So this is we're not going to watch all 9 minutes here, but there's a point of what I want to do here. So this is a Mad Money interview that the CEO of Theranos did on CNBC.
Lately, one of the most exciting privately held companies in Silicon Valley is coming to
So it's a privately held company, and what the company does is they determine if you have bad diseases, not by taking like a whole bunch of your blood, but a few drops of your blood. And then they'll determine that you have like, I don't know, like Parkinson's, whatever disease they can determine you have by blood.
That's the diagnostics company with the ultra-fast fingerprint blood testing technology. It's aiming to upend the entire traditional healthcare establishment by making it easier, less expensive, and much less uncomfortable for you to get tested for a whole range of conditions. For the last few years, Theranos has been viewed as a revolutionary company. CEO has been heralded as next Steve Jobs. Company's been valued as much as $9 billion. Its most recent round of fundraising.
So privately held company wasn't publicly listed at this point in 2015, valued at $9 billion. To put that in perspective, The WeWork one that we were talking about was valued obviously much greater, $45 billion. So in the scheme of things, this is a smaller company, but again, it's got some of the same kinds of
Didn't
dynamics.
she get in trouble?
Exactly.
Yeah.
I thought this also has,
I thought I
and just this morning, the Wall Street Journal,
She's got
had a
that.
pretty scathing
I've
article
got
about
trouble.
Legislative companies' proprietary testing may be inaccurate, basically accusing Theranos of deceptive practices. The journal cites a former employee who claimed that of the 240 tests ordered by Theranos, only 15 are actually performed on the company's proprietary Edison diagnostic.
So here, this person would be using some now fundamental analysis, right? I want to talk to the CEO and I want to find out about their testing thing and figure out whether, whether Michelle's smart or whether I'm smart about it, right? Who's the dummy? And if I think I have directly talking to CEO and the CEO doesn't lie to me, then I might have an advantage over someone else.
Diagnostic machine, vast majority of the rest being done on traditional lab equipment. The article is pretty brutal, but here on Mad Money, we know something. We know that there are two sides to every single story, which is why I think it's important that we speak to Elizabeth Holmes, the founder and CEO of Theranos.
There's a fundamental
who's coming to us
analysis
this afternoon
statement
from
for you.
Boston, where she's attending a meeting of the Board of Fellows at Harvard Medical School to give her a chance to answer the charges raised in the article. Ms. Holmes, welcome back to Mad Money.
She looks like a
It's great
robot.
to be here. Thank you.
Thank you, Elizabeth. I didn't tell you in all my years, I can't recall.
Why am I
private
crazy?
company
Someone probably thinks I'm
Caitlin, you've never heard of getting this kind of attention and scrutiny. What do you think's going on here?
This is what happens when you work to change things. And first they think you're crazy, then they fight you, and then all of a sudden you change the world. And I have to say, I personally was shocked to see that the journal would publish something like this when we had sent them over 1,000 pages of documentation demonstrating that the statements in their piece were false. But
so the Wall Street Journal piece, what it said basically is that the way that lab analysis works now, right? They put all the blood into a vial, they spin it around, they do some things to it, and they say, dude, you got Parkinson's, right? The idea here was going to be they take a few drops of blood, they put this little thing of blood into this machine, which was called the Edison machine. They throw it into the Edison machine, it does whatever it does, and then an hour later it comes back out and says you have Parkinson's, and it only took it like an hour to do it, and it cost a lot less. The idea here was you could do it at Walgreens, right? You could get your blood pricked rather than having to go to a doctor's office. And the Wall Street Journal article did an analysis and did interviews with people that work at this company who said, no, this machine's broken, it doesn't do what it does. She's now saying, no, it does it. Like, don't, and that the people that are being grumpy with her are basically those medical testing companies that are going to lose a lot of their business because of this company.
doing things differently, and we're working to make a difference, and that means people raise questions, and that's okay. But in this case, it was pretty disappointing to see that after every single one of the sources that we spoke with, who the journal had contacted, told us that the statements that were being attributed to them were false or misleading, and the only sources who were left were ones who wouldn't speak with us, who on their own website say that they now do business with LabCorp in their office, or in the other case, demanded in writing that we pay them in cash upfront $2,500 for an hour to talk to them about their statements to the journal.
Did the journal
those
know
things
what
were
you just said?
referenced.
Did the journal know everything that you just said before they wrote the article?
Of course, absolutely.
Okay, sitting on a pretty negative article, so let me ask you, I know that you talked to us about your partnership with Walgreens, one of the best retailers out there, great drugstore chain, Cleveland Clinic, one of obviously the most admired healthcare facilities. Did either call you today and say, you know what, we got to rethink our relationship?
Absolutely not. We're incredibly blessed to have partners who have worked with us, have actually seen our technology, and unfortunately in this case, we offered to bring our technology to the journal offices to show them the technology they were questioning running firsthand, and they denied that request to show it to them. But Cleveland Clinic, Walgreens, so many of the other partners that we have seen our technology, they've worked with us, they've used our systems, and they understand what we're doing, and they understand that when you try to change things, people react to it.
All right, so
Okay, so what say you? Who do you believe?
Crazy notes. I don't know, she's kind of convincing.
Yeah, well, it turns out she just lied to you. So it turned out that Walgreens had never seen the inside of the machine. They never asked to see it, and so they didn't have to show it. Anytime anyone ever wanted to see it, what they would do is this person would give that blood, and then they would run it through a traditional machine, like the ones that they were trying to upend, and get some results back, and then say it came out of this one set top machine. That the inside of the machine, they couldn't get through the technical hurdles to actually make it. So they promised that they would do it. They made a business around this piece of machinery existing, but they could never get it to work. The company failed because she committed fraud. There's an exciting, well, not exciting. So she, I think at this point is 31. At this point, she's dating the CFO who's like 60 something, and then he divorced his wife so that he could like hook up with her. So they committed the fraud together, which is usually a good way to commit a fraud, is get the CEO and the CFO to do it together, because otherwise it's really hard they both have basically the same amount of information. But the two of them were hooking up, and they basically committed a fraud, which you can more easily do as a private company, as you saw in the case of WeWork, because you don't have to say as much. You don't have to reveal as much. So she's being sued. Actually, she just got married a few months ago to a rich person. So she married rich, so that will probably get her through the tough times. But unless she has to go to jail.
So it started off with good intentions, but then once they weren't able to make it, figure out, like you said, the technical.
That's a possibly generous interpretation, but yeah. I mean that's one way to see it, right? I mean, I think a defender of her would say, dude, it's not her fault. She just like promised. It's like the Elon Musk saying cars are going to drive themselves. Obviously, the technology isn't perfected yet, right? Do you want to fault the guy for like, making a big goal and trying to reach it? Like, don't you want people to work? So one interpretation would be the technology just didn't get fast enough for her to be able to deliver on her promise.
But then she did get up there.
She did lie, exactly. So then the more critical person would be, she just lied right there, which,
Old phase.
it's not like it's, yeah, I mean, technically speaking, at this point, she's not breaking the law because she's not a public company. So, like, I could go on TV and say airplanes aren't meant to fly, right? I mean, I could say whatever I want on TV. There's no law against it. But the problem I think she ran into is, I think they were billing Medicare or Medicaid or something. There was some insurance fraud issue, which, but basically the company's bankrupt. The company no longer exists, and
Regardless of the legality,
but she didn't want. But so it obviously doesn't help her. I don't want to watch this, but you could on your own time. Obviously, she's raising her hand in a deposition. That's generally not a good sign of
said she got married to a 60-something-year-old.
No, she broke up the marriage of a 60-year-old guy. She ended up marrying, I think, someone younger than
Billy Evans. Billy Evans, the hotel.
What was that?
Yeah, I heard he was like shit's gold. Right? Yeah, Christian Holmes the Fourth. That sounds like a rich person's name, doesn't it? Christian Holmes the Fourth.
She sounds like a gold.
She does, yeah. Well, that was her old first law. She was dating him for 13 years. Ramesh Balwani. Oh, I'm sorry. He was 53 to 54. His birthday, we don't know it. It's March to June. It's pretty great. That's a great birthday. I was born in March to June.
I'm curious about how he looks.
Let's see. That's a good question.
He was obviously born in Pakistan.
I mean, he's my understanding is he's not like it's not him. No, he's really old. Let's go to images here. That's not. He's not that young looking anymore. I think he's. No, maybe he is. What am I critiquing him? It's not like I'm. Mr. Swabby here. I mean, yeah. I basically. This is a pretty good. With the British do it. That's him. No, I don't look 53 or 54. I guess. Elizabeth Holmes faked the baritone of her voice is fake too? Jeez. So we can't believe that? Oh man, that'd be cool though if she did fake her voice, huh? It sounds a bit odd. So we can't believe that? Okay, well.
What is that? David Mail.
It's like the Inquirer.
Oh, I see, okay.
All costs.
Okay, well. So part of the, you don't typically see television shows about fundamental analysis. And the reason why you don't see those is because why would you want to reveal the information you just spent all this money to find out, right? The only way you would see those kinds of shows is you would have to pay for that information. Like these Bloomberg terminals is a perfect example of where you're getting both forms of information, which is why you see them as a tool at all kinds of trading houses, because you can do both your technical analysis, your charting, but you can also do your fundamental analysis because, for instance, you can find out for Hawaiian Airlines how much of its, for the airplanes it buys, how much of its business is coming from China, right, in terms of the parts that are used on its airplanes. How many passengers are coming from Chinese locations? So they collect all that information so that, again, if someone else doesn't know that, because they can't afford these Bloomberg terminals that are $1,900 a month, I'm going to be able to profit from it because you didn't know that piece of information. But also I can profit from it because I can run all of these very detailed charts and figure out, oh, it's going to go on the upswing or it's going to go down after they announce earnings, which right now we're in earnings season. So things that are in the stock market are a bit more volatile because earnings are coming out. The one that came out today was 3M. So let's look at 3M. The maker of posters. Let's look at this. So, how far do I want to go back on this? Well, I guess I should make sure too. I don't want to presume anything. Are we all fine with the difference between stocks and bonds? Are we comfortable with that distinction between the two? Yes or no? Stocks would be buying a share of ownership. Bonds would be you're getting promised to be paid back at a future date. You can make money with both types of financial instruments. Obviously, the one that's hot and sexy are stocks, right? Because you basically own something. You own a part of it. But you can make money on bonds. Sometimes I make more money on bonds than I do on stocks. And there you're making predictions about interest rates, about the going concern of the company, et cetera, et cetera. But people don't typically report things about bond prices changing because they don't change with such volatility. Here, we're looking at the share price of 3M. On the New York Stock Exchange, ticker symbol MMM, obviously for the 3Ms. Let's look at this from finance.google.com. So I like finance.google.com as a very kind of quick lead on things. Oh yeah, Amazon this too. Okay, so what I'm seeing here is that it's gone down 4%. Okay, so we start to look at things here. So here you see a chart of the share price at least over since January, right? So again, you could imagine from a technical standpoint, I mean, I could very simply start throwing things into Google Sheets and try to forecast a price. That wouldn't be exactly what you'd want to do though, because there's a lot to be said for the volatility during the day. This is just looking, right? If I charted this data, I'm only looking at the closing price on each of these days. But there's really exciting things that are happening during the day. So then the question is, how do I find out about that? Like, how do I find out what's going on during the day? You would think that no one uses Yahoo anymore, but the finance.yahoo.com website is actually very good. For some odd reason, they actually have a very good site. And again, I don't use Yahoo for anything but this. But what's useful about this, if I want to start doing these kinds of things, look what I can start to do. So under indicators, we can start to do things like I can start to see all of these techniques here that are listed here, these indicators are all options trading strategies. Again, dude, you're not going to find that on the Google Finance site. Yahoo just has been in this business long enough, and I don't know how to make money on it. But what you're going to see here, right, is that I'm looking at the data here. It looks like I'm looking at the 1 day data. But now I can start applying a strategy to it and try to figure out ways to make money. I'm not going to go into all these different strategies. That would be crazy because we don't have the time for that kind of thing. But let's just take a simple one here. So what I'm looking at here, what is being charted down here at the bottom is the volatility that's happening during the day. What we're largely seeing here is that this isn't that the volatility of the share price has become a little bit less pronounced than it was during the summer. And the summer was a more volatile period of time for investors. So what that would mean is that if we're entering this period of perhaps a little bit more volatility this past month, maybe it's going to make sense to start to do some options trading, because you need volatility to make money in options, right? You want the price going up a lot or down a lot to make money in options. Otherwise, if the share price is relatively stable, where is it money to be made? If we look at this same site, who's going to listen to the earnings call? This would be the fundamental analysis person, meaning, are they going to tell me something new about the company, right? We made a new sticky or post-it note, maybe, I don't know. But here we go with the candles, right? So here what you're seeing is that on down days, we're seeing red. On up days, we're seeing green. Let's look at a little bit more of a shorter time period here. Let's look at a longer interval. Let's just look at the past 5 days. So let's do 4 hours over the past 1 day. Okay. See, look how cool this is. Then I could like, send you a chart and I could like start drawing on it and like but again, why would I want to do that? Because, I mean, part of the reason here, right, is I want to tell you about my great trading idea, right? Something clearly happened here, right, where the share price went down, by nearly 6%, 5.5%, where it went down. So something clearly happened that day. I would want to study the volatility that happened during that day to be able to say, let's say that was an earnings announcement day, I would want to understand that volatility so I could apply it to, right, yeah, if it was yesterday, so I could apply it to the earnings that came out today. Try to understand the prediction. At the end of the day, I'd say they're going to make their earnings estimate or they're not, right? And then from that, I would make a change. What do I mean when I say, what do we mean when we say an earnings, quarterly earnings? Basically, as kind of many of you know here, each company that's publicly listed has a There you see your candlesticks a little bit more there. These companies have an earnings call, meaning 4 times a year, they're going to say, we meet our earnings estimate or we did not. So what does that mean? So today was the day, October 24th, they announced their earnings. What they're doing up to that point is they're going to say to you, this is what we think our revenue is going to be as of that, in this case, as of September 30th. This is what we think our costs are going to be as of September 30th. This is what we think our profits are going to be as of September 30th, et cetera, et cetera, et cetera. And what the company is doing is it's telling Wall Street and telling all of us what to expect. Because in this case, you could see, you know what, 3M did not do a good job. Things should not be changing that much. Because what they should have been doing is they knew what the numbers were. They should have been telegraphing, telling the markets, dude, it's going to be a rough quarter. Just to let you know, things are not going to be great. So that everyone then expects it to be bad, and then when it's bad, the share price doesn't go down 5%. You don't want that kind of volatility because all of these things rely on psychology. The psychology of me saying, dude, 3M's a good company, or in this case, wow, what's going on at 3M? Why are they screwing up so much? To put this in perspective, I remember buying, I think about 100 shares of 3M at the beginning of the year. I sold it, but I sold it at $195. That was only like 10 months ago, 9, 10 months ago. Dude, share price drop of $35 in 10 months for a company that's like another kind of company you would, you know, if someone was going to be an orphan, you'd want them to invest in this. Their price went down that much. Like, you know, this isn't the company that on the CFA challenge competition, Howard Hughes Corporation. So they're the ones that run Ward Village. They own a bunch of other master plan communities. Last December, here in Hawaii, the teams that had to perform an analysis of Howard Hughes Corporation. They had to make a prediction of what the share price was going to be 1 year from now. You can see that someone has done that analysis here for 3M. That they're saying 1 year from now, the share price is going to be $172. The question would be is, how'd they get that price? That would be part of what someone that does a fundamental analysis does and someone that does a technical analysis does. They're making a prediction of what the future price is going to be. Here for the West Oahu team, we did a little bit more, we sided a little bit more with doing a technical analysis. We ran a bunch of data, we did a Monte Carlo analysis, and we came up with at the time the share price was 110, and we came up with a 1 year target estimate of $116. So it would have gone up $6 in 1 year. Given the alternative investments one could have done, like even putting money in a bond or anything like that, we gave it a hold recommendation, meaning I wouldn't go out there and buy it right away. I wouldn't go out and sell it right away. I'd just kind of stay with what I was doing, holding it basically. If you thought the share price was going to fall dramatically, obviously you'd give it a sell recommendation. If you thought the share price was going to go to, in the case of Manoa, they said that the 1 year share price was going to be like 165 or 170. They obviously gave it a strong buy recommendation. There were 3 teams that competed, us, Hawaii Pacific University, and Manoa. Hawaii Pacific said, I think their 1 year share price was going to be 145 or 150. They also gave it a buy recommendation. We were the only ones that gave it a hold recommendation. There you go. 111. No, this guy must have gone to Manoa. 150. I went to HPU. No, listen, it's Schadenfreude. I'm not trying to take advantage of their misfortune because.
Why not?
Well, because next time I'm going to be wrong on something. Like, dude, if it was easy to make money on that, I wouldn't be sitting around with you schmucks. Right? I make money on my own. So I'm right as much as I'm wrong. But I mean, look at that. I mean, even in the after hours, it went down 2%. But here's the, right? I mean, sometimes you do a technical analysis and it reveals to you what's going on, but and sometimes you do a fundamental analysis. Here's how I would critique Manoa, if I had to critique Manoa. And again, I'm saying this as an overview because and sometimes you might be learning about what the two types of analysis is for the first time. They all have their pitfalls. I think Manoa could have said, wow, Wes, you're dumb. Because the CEO's coming out, and in this case, the CFO flew in from the mainland and gave this really slick presentation about they own like a minor league baseball team in Vegas, and they're building a community around this like stadium. They like owned a part of a seaport in New York City, and they were building a whole like Live Nation like concerts studio, concert performance arena around it. And so you listen to this guy, and he's like, things are great, like just like that. Right? Things are great. There's a lot of value. The market just doesn't like us because we're too small, we're too hard to understand. We're not a real estate investment trust, you just don't understand us. So we think the markets are undervaluing us. We think that our story is going to get more understood by others, and it's going to take off. If you're doing a fundamental analysis, you can either say, I buy that, or bullshit, right? And if you buy it, then you say, strong buy, let's get in while the going is good, let's buy all we can at 110 a share, right? Because we think it's going to be 150, 160, 150, 25 a year from now. Others would say, dude, you really think that all the bankers are just dumb and don't realize the value of your company? Like, do you think they're just ignoring you because you're that small and you don't do it? His answer was, we don't do a lot of business on Wall Street selling bonds, so they don't like us that much because we don't generate profit, we don't generate fee commissions from them. I mean, come on, bullshit, right? I mean, who cares, right? You'd still buy something if you thought it was cheap, whether you got a lot of money from them or not. And I'm not saying we call bullshit on it, but we did a technical analysis looking at the share price, the volatility of the share price over the past 3 years, and then basically did simulations with confidence levels of saying that there was a 95% confidence level that was somewhere in that range. Then we used a fundamental analysis to say where in that range, that 95% confidence level range, where we would be in that, what would you call that envelope, right? That space, right? That 95% confidence interval space. Well, there must have been some analysts that would agree with me on some, well, maybe I think it's now they're agreeing with me or us, that are now saying it's overvalued, which are clearly, I don't think this has been updated. They basically, let's look at this. Actually, this was only a few days ago. Look at what happened there. So, as of a week ago, I was trading for about 125, 126 a share, and then something happened. A drop like that, that's what the fundamental analyst is trying to take advantage of, right? They're trying to say, I can predict that that's going to happen before it actually happened. In this case, the CEO was pretty dumb. I mean, they're all kind of smooth talkers. They all wear nice fitting suits. But this guy seemed particularly, it just seemed like he had the right connections. That's how he got the job, not that he was actually qualified to do it. And what happened here is he got fired. They replaced the whole board, and they're now going to get rid of like that like harbor and that like arena thing. And you're just going to focus on big plots of land, building a whole bunch of houses on it, and just selling it. So they're going to get, it's going to be less exciting, but they think they're going to make more money on that more focused way of doing it. Kind of like even what they're doing at Ward, right? You might do fewer restaurants and just build more condo towers as a way to make money. That represents a fundamental change in the business. It represents a change in the management that maybe some analysts have grown to love and trust. And now you got this new guy that I have to decide, do I trust this new CEO? Do I trust this new CFO? And that's what you're seeing here, right? I remember doing this at This was at Campbell. So I said, pick any share price you want, and let's look at it. Guess what they pick? What would a teenager pick as their favorite stock? No, one said Sprint, because I guess they use like burner phones. No, it wasn't Nike. The Buckle. You remember that like old store that was at the malls? Didn't you buy like, I don't know. I remember the Buckle, right? You'd get your like first pair of jeans, like a cool pair of jeans. I don't even know if the company exists anymore. The Buckle, yeah, I guess it does still. Wow. That's what teenagers like these days. Really? Oh, maybe it's not here. I don't know. I mean, it must be because they were talking about the Buckle. I think it's like the.
What is that?
Well, again, they sell like. My understanding is that they sell clothes. Yeah, casual apparel, footwear, and accessories for young men and women. Yeah, they basically sell jeans. Well, it's based out of Nebraska, so obviously that's the hot spot for fashion. Okay, so let's just say this. I don't know. Why don't you just give me a company? Give me any company you want. Amazon? Do you want Amazon? Amazon? Okay, AMZN. They lost a lot of money today. I listened to the earnings call today. What happened was they have been really facing a lot of competition on the earnings call, so this is a little bit more fundamental than technical. They said that Target's really being a good competitor in terms of online, and they're losing a lot of money because they don't have stores to distribute their items, so they're now doing one-day shipping, no minimums, and they're even like allowing you to like say like, oh, I'm looking for deodorant, and you can have it shipped to you in one day. So they're obviously losing a lot of money on shipping. And this is the thing I learned on the earnings call today. The volume of business they do in the fourth quarter is 10 times the volume of what they do in the third quarter, obviously because of the holidays. But what that allows you then to say is, dude, if they're losing this much money in the third quarter, how much are they going to lose in the fourth quarter when everyone's going to have everything right away? And people are like saying their box got lost, all those kinds of things. So they're going to lose an even greater amount of money. It's down $120 a share in the after hours. So what you're seeing here is that the earnings don't come out. Either earnings come out at one of two time periods, either before the market open or after the market closes. And what you're trying to do is obviously people here thought, it's not going to be that bad. I think when the earnings come out after the market closes, it's not going to be that bad. So people bid up the share price by about $20 a share today, about 1%. And then it turned out, it was really bad. Now the thing about this is not how bad it's going to be tomorrow when it opens. Because after hours trading is very light. It's a very small set of individuals. You and I can all do it. I mean, we can buy stuff in the after hours or before hours, but tends to be a little bit more expensive. You have a shorter time period in which to buy it. Short-term traders are using it more, so the volume is much lighter than during the day. What do I mean by volume? By volume, I mean that today we can see that in terms of shares, about 5.2 million shares traded hands today. Either people are buying or selling. Well, obviously not buying or selling, buying and selling, because for every buyer there has to be a seller, and vice versa. You and I would be buyers or sellers, but also the company can buy and sell its own shares that it owns. If a company thinks, as in the case of Howard Hughes, they were convinced that their share price was undervalued. So then you would say, well, dude, if you think that so much, are you just blowing smoke up my ass, or are you going to buy the shares that you think are so undervalued? So you got to say this for Howard Hughes. They weren't delusional. They were actually buying shares of their own company because they thought, wow, it's undervalued. Well, it turned out they were wrong too, right? But they weren't wrong. They weren't lying and wrong, right? They were just wrong, and they suffered the consequences that anyone suffers. If we look at the share price here, Amazon is the worst performing of the FANG stocks. FANG is the high growth tech companies. That would be Facebook, Facebook, Alphabet, Netflix, Google. What's the other N? Or no, it's two A's. Sorry. Amazon. Yeah, Amazon and Apple of the FANG stocks. So FAE and A. This is the worst performing of the FANG stocks all year. And if you look at it on a 1-year basis, we will see this here.
What is Alphabet?
Alphabet is the Google. Sorry, I originally said Alphabet, but the G is Google. But Google's ticker is Alphabet. So Alphabet runs all the Google properties, basically. That's how you would buy this through Alphabet. But here's what I want you to, if you're hearing this on, you're like, wow, Shay, this is way too much information. I don't even know what I would do with this. There's only one big thing I want you to get from me today. You should not care what the share price is. It does not matter that this is $1,780 a share, just like the buckle was $20 a share. I don't want you to think the buckle is cheap because it's 20 and that Amazon is too expensive because it's $17.80. Because that means nothing. Well, it means something. It does mean something. I shouldn't say it means nothing. But the price itself, in terms of the share price, does not tell you very much. Because what you need is more information. You need to know how quickly is the company growing. That's the most important thing. Why are the FANG stocks so exciting? Because what if Netflix all of a sudden said, we're going to track your IP address and you can no longer share your passwords? What would you think that that's going to do to Netflix's earnings, its revenues bringing in? For all you freeloaders.
I don't think it would change.
That would mean that you're all going to have to start buying your own subscription, and my sister can start get off mine. Dude, I should just create a new profile. Because I don't know my, what? Yeah, I have Hulu actually. Because my sister just keeps watching it, and it gives me these like screwed up recommendations. I think I've shared this all with you before, but like, I didn't actually know that there's like basically like soft porn on Netflix. Like, I had no idea. Like, I was watching. I think it's like really cool. Those like IMAX movies where you like see like animals like in their like home and you just like there's no narrator. It's just like, oh, that lion's friends with that other lion, and you know they're building a family, and they just ate that jackal, right? And animals are great, right? I think you're going to see where this is going here when I mean, yeah. So I watched one about beavers because I was like, oh, that's cool. They like live underwater. They make like a dam. They're like, oh, and then this couple of beavers, they had a baby. They had babies. One of them died, but they had this lived, and they formed this like, you know, this dam, and then the dam broke, and then they built it back up again. And then you know how like when you watch a movie, it then says, oh, related titles. And it was like software. It's like, how is this related to that? And all I can think of is your algorithm is either really screwed up or someone was really disappointed. Either way, right? In my case, I was disappointed because I was like, where's the animals? And in the other case, I was like, you know, where's the skin? Right? But right, I mean, that's what Netflix. But if they announced that, right, they just said, "Dude, give me your own subscriptions, no more sharing," and you had advanced knowledge of that information, right? That would be a pretty. The thing that's been going on with Netflix this week actually is they've announced kind of exactly that thing. Not that they're going to say you have to get your own thing, but they're going to have like a pop-up that says, "Dude, we kind of know that you're watching it on this IP address." And your parents are watching it on this other island on their IP address. So we know something's going on. You can still do what you're doing, but we know something's right. So it's to make you like, oh shit, the deal is up. I'm gonna have to get my own. So they might be leading up to you have to get your own. Let's look at it.
But then can you link multiple devices?
Here's what we want to share. But what would you say? This is now going to be a really high growth company. Right now, the number of subscribers are falling. Because, dude, who doesn't have Netflix or know of someone that they can get their password from? Right? I mean, I don't know. Like, well, I don't think I would, because I just think it would be right. But what if like an ex-girlfriend called me up and said, "Dude, can I have your Netflix password?" I'd be like, "Well, I don't know. Like, what is it costing me, right? I mean, like, what do I care, right? I mean, right?" Or it'd be even more exciting. Like, right? What if I said, "Dude, right, my wife knows my Netflix password. I know mine, obviously. And then we got a divorce. What am I gonna do? Like, change the password? Like, no, we'll just each keep using the same password." What if we now each have to get our own? This is going to become now a high growth company, and investors pay for growth. That's important. That's what's determining the share price. Why is Netflix selling for $271 a share? Why is, and this is going to become important, why is the PE ratio, the price of the share to the earnings that they bring in, why is the PE ratio so high? Because investors are paying a premium for the high growth of this company. And what you can see here is that the share price, even since June, the day before my birthday, that the share price has gone down from what, little over almost $360 a share down to $270 a share. So down $90 in the past, what, 4 months? Why has it gone down so much? Because people are saying, Netflix isn't growing as fast as they used to. They had their June 30th earnings, and obviously that's probably the motivation there. So they probably missed or came very close to missing on that earnings there. And then they already had their earnings call here. So now I'm going to be looking at this earnings date here and trying to say, okay, is this strategy of warning people get your own subscription, is that working? Or are my subscriber numbers still not growing fast enough? They're growing. It's not that people are dropping Netflix. It's just that it's not growing fast enough. To put that in comparison, Walmart, right? It's not like I'm going to say, dude, there's a store just on the street that sells discount stuff that's always really low price, right? It's not like I'm going to be revealing to you the first time that Walmart is this. Meaning the growth is 1%, 2% a year. There's nothing exciting about Walmart. The same story used to be able to be told about Costco, right? Because people are Costco, and things are what they are. I bought Costco, I bought about 1,500 shares about a year ago. The reason why I bought it at about $175 a share. The reason why I bought it was because buried inside of one of the earnings calls, so this is a little bit of fundamental analysis on my part, was that they hired a new person to do their online stores, right? So when you think about Costco, you don't typically think about going to Costco.com and ordering, I don't know, a Survivor pack of, 5,400 servings of macaroni and cheese for the apocalypse. But apparently, they make a lot of money selling stuff online and shipping it to you. That's actually what's driving up the share price as much as it is. Look at that share range there. Look at the 52-week range. So again, it was about a year ago I bought it at about $175 a share. It's now almost $300 a share. Now, it's not all that, but the reason why is, look at that PE ratio. Very different. And the reason why, why is the share price gone up so much? Because now there's this realization that, hey, maybe Costco isn't as slow of a grower as we used to think it was. Now that they're really hitting it, doing online sales, maybe it's actually a higher growth business than we thought it was. As opposed to, Chewy. The problems with this, they're not making any money. Right, so now you're getting into an interesting side of this space, right? Is what do you do with the company that had an IPO, but it's not making money yet? They sell pet food, They obviously missed here. So this is kind of cool. Again, Yahoo doesn't do very much well, but this they do really well. I mean, again, you're getting a sense of, this is the consensus EPS, consensus earnings per share. This is what people thought it was going to be. People thought that they were going to lose, or people thought that they were going to lose 11 cents. They actually lost 21 cents a share. So obviously when that was announced, they lost a lot of money because everyone thought it was going to be a loss of 11. They lost 21. December 16th, people are now saying they're going to lose 16 cents a share. So now you're going to make a bet. Are they going to meet that expectation that's been priced into the share price, or are they going to miss it? People are saying when your estimate 36.80, you can look at the earnings per share again, 65 cents loss per share. What you're basically you're going to have to bet on is this company going to make money on the growth? The other classic one we've seen this year would be Uber. And in the case of Uber, it's losing $3 a share. So what did my wife do? She took an Uber last week. Dude, it was so cheap. To go from Manoa to the Hilton Waikiki, I think she paid $4 for a ride. Dude, how can you make money on a $4 Uber ride from Manoa all the way to Hilton Waikiki? You can't. How can you make money? IPO list price was $45 a share, if I'm not mistaken, and it's obviously selling below that. Yeah, it's gone down as low as 28 a share. Full value. I don't know how you give it a hold rating. Well, actually, I do, because they're making money on Uber Eats, and they do kind of own the Uber Eats space. But anyone want to guess what's the biggest reason why Uber Eats makes so much money? Because their biggest contract is to McDonald's, which is the exclusive Uber Eats venue. So all the other restaurants use like DoorDash, Uber Eats, Postmates, they use all of them. But McDonald's agreed, I think it was about a year ago or a year and a half ago, that we're going to try out this delivery thing, and we're going to exclusively do it for Uber Eats. Now that they know it works, that contract is coming up. And now everyone's going to probably, right? Why would McDonald's want to lock itself up with Uber Eats if they can make money with the others? So I don't know why you would think that this company would be a whole, but again, you're making a bet. I've told you a story, obviously expressing my sentiment. Maybe you think that Uber Eats is just a better technology than DoorDash, right? That's where we gotta, put your money where your bets are here and try to do this. So what we're going to try to do here, and again, we're not going to have enough time to do it here because, well, that's going to be the whole point of the financial economics certificate, is we want to be able to both understand this, what I'm showing you here, that you can tell me what the story is behind each of those statistics. So that would be things, I don't know, Levi, you dropped out of it already. But if you take the investment class or even just the simple finance class, you would probably be familiar with most of these statistics that you're doing here, I would hope. Or even some accounting skills you'd be able to say what's going on here. But honestly, knowing this is only part, this is just literacy of being able to see this, being able to say what it is that it's telling you. Because honestly, you're not going to make any money unless you can make a prediction in a reasoned fashion about the future. Again, similar to the difference of me saying the unemployment rate is 3.9% this month, I'm only going to make money on that. I'm going to make money if you tell me the unemployment rate 2 months from now is going to be X within a certain degree of reliability. That's what we want to be able to say. We want to be, and that's the whole point of the chart. So a person that does this for a living would be a financial analyst. And you can, like a CPA, you can be considered a chartered financial analyst, a CFA. The CFA Society of Hawaii has a research competition, which we're looking for good team members. So if all this stuff sounds interesting to you, even though you don't have all the information, to join our CFA research competition team. Because what we're going to do in that research challenge, we're going to compete against 2 or 3 or 4 other schools. And we're going to figure out why they're going to give us the company, and we're going to figure out what the share price is going to be 1 year from now. And we're going to basically have to defend to the members of that company and to others and say, this is why we think the share price is going to be what we're telling you it's going to be. These are all the reasons. Obviously, they probably didn't like hearing from us, we think your share price isn't going to go anywhere. We don't think we should buy it. So that's probably where the vote will go anyway. But
We should have a competitor.
there's what?
We should have a competitor.
Yeah.
I mean, because again, they don't want to hear the negative.
Yeah, I mean, yes, so they should have. Yes, I would agree. Well, they do have so the CFO is there, so he was one of the judges. He even said, oh yeah, the winner will show their analysis to the CEO. Well, they did, but CEO's fired now. So, right, the CEO's like, dude, I listened to those Manoa kids. I bought it at $160 a share, and now it's $110. Yeah, but you know what? To be CFO, I mean, let's just look at Uber. No, let's look at our local airline here, Hawaiian. So, yeah, Hawaiian's kind of a sad story. It's hard to. Hawaiian, I don't know, 10 years ago, made most of its money. About half of it, I shouldn't say most of its money. About half of its money was flying between the islands. Or I'm sorry, about 3/4 of the money was made flying between the islands. The other quarter was flying to the mainland or to Japan, basically. And then about 10 years ago, they decided to diversify the business. As you know now, they do fly still between the islands. Obviously, it's the fastest way to get between the islands, but they also fly to Australia, New York, Boston. They fly to China. They fly to Japan. So they have a good, strong East Asian business, as well as increasingly going east on the mainland. Well, actually not increasingly. I think they go to Vegas, and then they do New York and in Boston. What?
Just those 3 cities on the mainland?
No, they do a whole bunch in California. They do Portland. They do Washington. But in terms of business hubs, like they just do New York and Boston. So when I've been on those flights, you're just trying to get to work, a meeting at the beginning of the day. So you just want to take the late night flight, get there early in the morning, do your stuff, and then get home at the end of the day. So you can do a one-day work trip in New York rather than like 3 days with 2 connections. Same with Boston. You fly to Boston, you connect to Europe, and then you only have to connect once to get to Italy. Something along those lines. So my wife has some of her businesses in Italy. She doesn't want to be gone for like a week and a half from the house, right? She'll fly. Typically, she'll fly on Delta, so she'll fly one stop to Atlanta and then fly the rest of the way to Rome, right? And then she's there in 20 hours. Stays a few days and then comes back. And is back in less than a day as well. Rather than like stopping 2 or 3 times through a bunch of different hubs, to make it back. But that's not the important part. I want to see the holders for Hawaii. So what you try to do is you try to say, who's making the bets on this? So BlackRock's always going to be big. Vanguard's always going to be big. The reason why these guys are buying it is because they have exchange traded funds, meaning they buy everything. So they have to buy this because they buy everything. Where it becomes a little bit more interesting is when you start to look at mutual funds, because mutual funds are different than other companies, because mutual funds are engaged in more active trading rather than passive trading. So think of the difference here. A passive trader is just saying, dude, I committed to you, I'm going to buy every share on the S&P 500. So you already know what I'm going to buy, and my job as the manager is really simple because all I have to do is just buy one of everything, right? So that's why if you look at the expense ratio for like a Vanguard total return fund, it's like 0.01%, because dude, you could do that, right? All of you could do this job. All you have to do is be able to count and just find out what every stock is and then just put in an order for all the things that are there. It's pretty simple. Where you make more money would be on active trading, right? So this would be more along the lines of what we're doing. You can't make a lot of money just buying one of everything because everyone can do it. In fact, the computer can do it. So you don't need the only way someone like my wife can make money, right, that I gotta feed myself with, would be her saying to a client, dude, this one, well, she wants to do, but this one mutual fund has been really outperforming the others in the small cap space. So we think that you should buy, if you want to have exposure to small market capitalization stocks, like this company, Hawaiian Airlines, doesn't have a lot of market capitalization, then you'd be like, yeah, if I can own Hawaiian Airlines through any of these mutual funds, the idea is that they're all going to have different returns. And maybe the principal small mid-cap dividend income fund is a better place to hold it. Now, you have to pay more to own Hawaiian Airlines in that kind of mutual fund. The reason for owning a mutual fund is you spread out your risk across many different, in this case, small cap funds. But I maybe don't want to take on the risk of owning Hawaiian Airlines just directly. You know, some might say it's not that big of a risk, but if we look at its quarterly earnings, it's been beating by a small amount each and every quarter. That doesn't mean the stock is strong, though. It could just mean that they're really lowballing their company and they're just beating their very lowball expectations. John Deere, ticker symbol DE, is classically known as a company that's always down in his doldrums about itself. So they're just like, oh my God, the American farmer, everything is going to hell, right? And normally we'd all be like, oh shit, let's get out of that stock. They think that every quarter. So everyone, you know, so you wouldn't just sell the stock because they're so down about it, because they're always, you know, they're like, I don't know, pessimistic introverts, right? So like, why would you want to trust them, right? What they say. So you kind of listen to them, but they have a reputation. They're known for always being down about themselves. Hawaiian is kind of, it's Hawaiian, right? They're not like extroverts extraordinaires. They're not touting themselves like they're the greatest fucking thing ever, right? I mean, they're just like, we do our business, we go home at the end of the day, you know, we run a strong business. And no pizzazz. They're not trying to like pump the stock like WeWork was trying to do before it went, you know, gold. They're not John Deere either. So the fact that they're beating by a few pennies, I mean, it's obviously good news, but they're not beating it by a ton either. And the share price generally is going to reflect that, as it does here. Kind of what's held interesting here too. Held by the insider also becomes an important statistic here in this, because you don't want to buy something where insiders don't have any stake, because it's all about aligning interests, right? If the CFO doesn't own any shares of the company, why should I trust what that person is saying? So for Howard Hughes Corporation, that CFO had to buy something like $3 million of stock in the company. That was like part of his contract to become CFO. He had to buy a huge chunk of stock. Everyone was required to by contract to do that. Because you're trying to avoid an issue where someone says, I'm not going to buy Howard Hughes. The managers don't own the shares. Why should I? This is a pretty healthy amount. Most of the time, something looks like this. Let's look at John Deere, though. And then we'll take a break. We'll pick it up from there. John Deere, yeah, 172 a share, which is kind of amazing given the trade war. I think it's actually pretty amazing. It's not their fault though, because in their case it'd be like, dude, no one's buying soy. The Chinese are our biggest customer for soybeans, U.S. soybeans. They're not buying them anymore. Now we got to convince the Brazilians to eat our soybeans. How do we do that? Yeah, I mean, yeah, they're missing quarter by quarter by quarter. Now the big question is, and this is where you'd have to this is where you're going to make money on this bet, is if the tariffs didn't exist and there was no trade war, what would the earnings look like in stock? I can't really calculate that. Sometimes you can try to, but you're kind of going off a hunch too. You really don't know. John Deere sells small tractors that would be used on a farm. If we go more corporate farming and we don't need these little tractors anymore, the family farmer is dead, then why, oh, it looks like you're growing more sugar in Brazil. Maybe this company isn't as good as we think it is. Or maybe it's just Trump's fault. And once that trade war ends, the company takes off. Oh, you gotta make money. That's how you're gonna make money on this. Same with, sorry, this will be my last one. Oh man, I remember, oh man, I've talked about this one for a while. I made so much money on this stupid company. This would be the electric company for San Francisco, Pacific Gas and Electric. Basically, the company caused all the wildfires, and now everyone's suing them. Now they're bankrupt. But the whole thing is the state of California going to bail them out? The city of San Francisco, for instance, wants to buy the pipelines in the city itself. The share price right now is $7 a share. What did I buy? I bought it at like 16 a share right before, or no, I bought it for 16 a share right after they blamed Pacific Gas and Electric for starting the fire. Then there was a rumor going around, oh, they didn't start the fire, someone else started it. And the share price shot up to $25 a share. I sold it at that point, and then they said, oh, no, actually it was them that did it. And then it obviously it's fallen since then. But you know, I say that like obviously on the side of victory on my side, but dude, I could have just called it wrong. I mean, I don't want you to think, dude, Jennings made of money and he's just sitting on a big gold pile, because I mean, certainly my failures are just as big as my successes. Right? It balances out. Oh, let's see, what's a failure on my part? Oh man, the company that does exist. Peabody Coal. Oh man, that causes pains in the stomach. I don't even remember what the share prices were. I try to forget those bad things. But the idea was, this was during the Obama administration, was, were we still going to use coal? I was like, dude, half of the electric on the mainland is generated using coal. We're not going to go without coal. Well, turns out it was coal. Turns out that we did largely transition away from coal and went to natural gas. The company went bankrupt and lost it. Which company was it? What? It was called Peabody Coal. Ticker symbol was BTU. I don't actually think they certainly went bankrupt because I lost my money. They might have reorganized and got to keep the same ticker. Let's see. Well, they got to keep the ticker, I guess. Yeah. Obviously, now it's selling for 15 a share, but obviously, when they went bankrupt, all the shareholders got zeroed out, and then they restarted again.
Did they change their name slightly, or?
No, you just say I went bankrupt. You wipe out all the shareholders, and you get out of bankruptcy protection. So that's the reason why stocks are. Well, see, and they're saying it's undervalued. 1 year target estimate $24. I'm not saying I believe this hype, but
I guess I'm thinking about it. The company actually closes, they can't have the same name again, right?
no, they could. They could still have the same name. They can still have the same name. No, all that's really happening when they go bankrupt is they're basically reorganizing. They wipe out all of the shareholders. They make a deal with the creditors. So the creditors usually get something back. The bondholders usually get something back, but pennies on the dollar. You don't make a lot of money on bond, but you do make money on stock because, I mean, if I think about it, in my portfolio, all the stocks I own, apocalypse could come tomorrow and all my shares would probably be wiped out in value, except for my bonds. My bonds would still have some value. Yeah, I'm looking at this and I'm not even thinking about buying this again, even if it says undervalued, even if the earnings per share is that low, even if the P is that low. Once burned, twice shy. Yeah. No, look at that, dude, even beating on. Oh, I shouldn't even look anymore. It's just hurting. No, this person thinks she's smarter than me, and she works for the website Insider Monkey. So. Okay, let's take a break. It's 6:28. Let's take a break till 6:38, and then I'll pick it up from there in a little bit. Okay. That doesn't make you feel bad that I said that, did it? I'm just trying to tell you. They're not going to tell you that, what I just told you, obviously.
I'll check with them. What's the name?
That's sad if that is. I mean, I understand. Of course they're going to do that. Here's the comparison. Let's just say you said, you know what? Fuck it. I'm not going to do a life cycle fund. Scheiding said it's bad. I'm not going to do that. Instead, I'm just going to put everything in a mutual fund that they run. Okay? So let's say you just say, you know what? I'm going to do this. No, I don't even want to do that. Let's just say you pick this large cap core fund. So large cap core would mean large market capitalization core fund. It performed almost 10% this year. You're like, fucking hey, that's great. Like, that's a fantastic. Look at that guy. He looks serious as hell, right? Like, he looks like he's ready to make you money. Chartered financial analyst, the whole thing I was just telling you about now. Like, do you think he's going to take bullshit from it? You know he's going to make you money, right? But let's dig a little deeper here. Almost 0.75% of your money goes to that. He's wearing cufflinks, right? He's wearing cufflinks paid for with your money. He's a cufflink wearing guy. You know, he's rich because he's collecting 75, well, in this case, 75 cents on every $100 you invest, just for the privilege of investing with him. You might not think that's a lot, but let's pick the classic one. That's the this one's always like the hot one because everyone knows that they're really cheap. 0.14% versus 0.76. So here you've saved almost 0.5% of, or 0.6% of your money just by investing in a different way. This would be, but now, here's the thing that you have to decide, which, you know, when the TIAA-CREF person, what if you said this to your TIAA-CREF person? They'd be like, dude, if you buy this, you're always going to make only as much as the market makes. You're never going to make more. You're never going to make less. You're always going to meet the market. Me, cufflink wearing guy, I'm going to beat the market. So this is a passive fund, meaning they just buy one of everything. That guy, cufflink wearing guy, he buys in strategic ways that allows him to beat the market if he thinks he could. So let's see if he beat the market. Well, we do have to take into account the sales charges. But on a one-year annualized basis, yeah, the index was up 3%, but you would have lost 10%. On the 3-year basis, he made 9% a year. The market made 13% a year. On the 5-year basis, 7.21%, market made 10%. Since the fund was formed, he's earned 10.59%. The index would have earned you 12%. So he's charging you more and earning you less. Now, he's probably not going to tell you that.
Fire.
If you were informed, you would fire him. But the whole point of this type of space is relying on you being flooded with information, you being too scared to ask me directly or knowing what to ask me. Because he's not going to show you this, because if I knew that, why would I tell you what I just told you? All right? I mean, I'd just be like, dude, this guy's wearing cufflinks. You think he's going to lose money? Of course he's not going to lose money. He's serious as hell. He's a chartered financial analyst. He's not going to lose your money. I mean, look at that. Create an opportunity for additional total return so you can provide long-term capital appreciation. Discipline, fundamental, and quantitative research. Dude, I mean, why wouldn't you buy? Well, yeah, I mean, it's just.
The 2055 sounds really familiar.
I think you're probably, I mean, because it's so easy to sell you that, because then I don't have to say, what's your risk profile? What are you willing to invest in? I just have to say, how much longer? I just have to actually ask you how old you are. And then I say, oh, you're going to retire in 30 years, you're going to buy this. So you should look. What do they offer at the chicken place? What do you guys offer at the chicken place as a retirement fund? You offer what? Yeah, what's your investment provider? Like, who's your fund of choice? Like Vanguard, TI Craft, it's not TI Craft, but Prudential. It's who? How do you spell that? Oh, yeah. What is it? How's it spelled again? Yeah. SLAVI. Slavic? Like.
Okay.
Really? Is that really how it's spelled? I've never heard of him. I thought it was actually someone. Why did they pick them? You didn't pick them, did you? That's not your job, yeah.
What's the chicken?
All right, what is it called? Is it Popeye? Who's it? Popeyes, yeah.
You just call it chicken place?
Well, I know. All I remembered is it was chicken. That's all I remembered. No, I'm not belittling the chicken. I'm not belittling the chicken place. That's just all I remembered was that it was chicken. Hey, look at this. He's using a Bloomberg terminal. He's doing some coding. Look, that company does these people and the chicken place. No. Okay. Yeah. Yeah, the consultants. Yeah. Retirement consultants make. Yeah. I almost feel like we should spend one class period looking at shit. Are you eligible for the 401k? What do you put yours into? Do you know? I'm curious. If you want to, you don't have to. I'm not trying to get personal. I feel like I should. This is like truth time. I feel like I should say what mine is. I have two. As a University of Hawaii employee, I'm actually fortunate. I can invest because I'm both a state employee, but I'm also in education. I can participate in a 403B as well as a 457, meaning that I can save twice as much. So a 401k, you can set aside up to 19,000. I can set aside up to 38,000 because I can do both. Huh? A year. So a typical 401k can do 19. A typical 403 can do 19. But I'm in a weird position where I can do both. So state employees, if you do the 457, we all have to use this, which is Prudential. As you can see, they push you to do the target fund because then all they say is what's your age, and they really push you to do it. You have to really hunt to avoid it, which I did. What I did, see, again, boy, it makes it sound easy, right? Do it for me. I don't even have to think about it. I just picked the fund. I did the do-it-yourself one. So in my case, I did, for a while, I was actually putting everything into the BlackRock Total Return Fund. The expenses were low. 0.19. I was taking on a bit of risk, but the returns were pretty good. And I knew again that I wasn't paying very much. So obviously I was beating the market and I wasn't paying that, right? I'm consistently beating the index fund and I wasn't paying that much in expenses. I did get out of it not too long ago, in full disclosure, because I'm reasonably expecting with, I don't know, in my case, I think about 40% probability of a coming recession, which means I got out of it and I put it into the stable value fund, which just holds its value. And I'll hold on to it for a year. So basically it's gonna preserve my capital. And then if the markets do hit a correction, then I'll go back into the total return fund. So I'm doing more active trading than one typically would do with this kind of fund, but it's almost like I don't know, I find it exciting to do it. It's not a chore to do it. You probably would find it a chore to do it, so it's not like I'm telling you to. But I didn't want to take all my money off the table. So the other thing I did was I did the Vanguard Balanced Fund. It's called the Wellington Fund. It does a mix of both bonds and stocks. What do we got here? Do you know what you have yet? All right. So you don't have the island funds as your option either, do you? So again, the way that this industry makes money is on the commissions. That's how you really make it. Yeah, let's see what you got here. Wait, that's not yet. Oh, you're pretty good actually. You picked those yourself, or they did the mix? They did the mix.
Yeah.
It's actually, they actually look like they're giving it. They're actually giving a shit. It looks like actually. I'd stay with that. They actually look like they care. I'm actually pleasantly surprised.
When you say they, you mean Slavic?
Yeah, that Slavic actually cares, because I think they picked it. So he's 3% international emerging equities, but the bulk of it is in, for your age group, this is totally fine. The concern would be is how many 50-year-olds have exactly, then if you're 50-year-olds, you wouldn't want to have this, but for your age, dude, it's actually pretty good. You're not paying, because most of yours are pretty low expense. And yeah, you're actually in a pretty good space. Yeah, you're actually set up well too for a correction. You're not going to lose a lot in the correction. Yeah, that's pretty good actually. Yours I'm more concerned about. Yours, I'd be very surprised if you're not getting screwed on some level. With that one, not with the one where you have your guy. That one you might not be. But TIAA-CREF, you most likely are. No, I mean, just in full disclosure, I was in BlackRock Total Return. I've moved mine now to Stable Value and Wellington, 25% Wellington, 75% Stable Value. I'm going to keep an idea of how share prices are moving over the next 6 to 9 months. And if it turns out I was wrong, I might move some of my money back into Wellington. But I don't think I'm wrong. Obviously, I'm taking a bet. And if there is a correction, then there'll be a correction, and then I just have to time when to get it back into total return. But I'll preserve my value in the intervening time. Total stable value fund, this is just like a money market fund. I'm not paying any expenses because basically, what do they own? They basically own insurance contracts. You're not going to get paid a lot, but I as an investor, am getting paid, I think about 3% a year. So I'm obviously, if the market does really well this year, I'm going to underperform. That's the risk I would have taken. But dude, you're not going to get anywhere in this life if you don't make a bet and go with it. Well, I'm not saying that because you got to take bets at some point. You got to know when to hold them, know when to fold them. Know when to hold them, know when to fold them. Okay. Let's go back to, again, we have, I always, it's going to be so cool when you have a whole class whole course to talk about these things because I'm going to basically be trying to cram it into 6 classes, and we're not going to have anywhere near enough time. I brought a movie too, just in case things got boring today. I didn't know how boring things would be, so I did bring a movie. I don't know, I felt kind of bad. The 130 kids, they made fun of me today. It's a lot of first years and second years. They made fun of me about my movie knowledge. I didn't think it was that. No, I'm kidding. What was it? I didn't know I didn't name the wrong time period. I just named the movie. I described the movies accurately well. I just don't know the names of them. But I described them, and they all guessed the name, so my description must not be that bad. My description was a monster who, like, traps a girl, and they, like, live together with a talking cup.
That is not accurate.
What?
Midgets who live in trees?
Yeah, Midgets Who Live in Trees movie, yeah. Right? Isn't it in the
I
first...
would not think Lord of the Rings.
Well, someone did, and someone did get it accurate. I've never watched any of them, but I watched the very beginning part of the first one, and wasn't that guy with the big feet walking to that tree? Or going into a tree, or living in a tree, or something? Yeah.
Yeah, but
See, exactly. Everyone knows what I'm talking. Why are you guys being all pretentious about it? Right? You don't know any of them? But you kind of know the movie I'm talking about?
Your description was.
yeah, we first say midgets and trees. I have a different image.
Okay, what's the name of this movie again? Okay, Lord of the Rings. This is we're not watching the whole. I've only seen the very beginning of the first one. Yeah, I know there's a monster. I know they're trying to get like a thing.
Wait, so you've never seen any of the Lord of the
No, never. None of them. So, you know, like my movie tastes. But I did see the documentary about Tolkien, the guy who wrote it. I did see that. So, I mean, you know. But again, yeah, see, look. Trees, and there's a guy who's got big feet who's walking. How is my description? Why are you guys being so mean? Right? I mean, the guy lives in a tree. Okay, see, I didn't get this far, so I don't know any of this stuff. So I'm not trying to be like. But if we do like the beginning of the Lord of the Rings movie, I don't know. The one where the guy's like walking in a, I'm probably not going to find it here, but you know what I'm talking about. The very beginning of the first one where the guy's like, there's like that lyrical music and he's like walking down that like stone path and he's walking to a tree.
I know what you're saying. Trees are alive in the movie. Trees are like.
Really?
Yeah.
Holy fuck. No one said that in the other class.
There are midgets in trees.
Yeah, so after he said Lord
Wait,
of the Rings,
The
it's like,
midgets are different than the big-footed people, or those are the midgets? They have big feet. What about the guys that have the big feet?
There's a bunch of different races of things.
are
Oh,
the big feet hairy?
He's talking about the hobbits.
They're hobbits.
I thought they were all hobbits.
There's elves.
Like guys with pointy ears? Okay, so the elves and the hobbits, they're friends or not friends? There's dwarves too? What's the difference between a dwarf and an elf?
One's really
Oh,
tall.
yeah.
It's not
big
sad
ones.
as elves.
And
What's the mean looking guy, the one that's always stealing the ring? What's that guy? What is he?
Well,
He's a midget
Tortured.
that got corrupted by the ring.
a tortured midget.
So if you had said a tortured in a swamp,
Searching for a ring.
even if you left that.
There's no way I'm gonna watch any of these movies ever because
Then midget and trees help us.
I can't,
Midgets and trees.
dude.
Just had a different image.
There's another one. Oh, shoot.
Yeah, there's no way I'm gonna watch any. Because the other one I described today, which I thought I had a worse handle on, but now I actually think I have a better handle on that movie, was the one where the guy hooks up with that girl and he's a magician. He's got that friend, and they go to school and they're magician school.
He's talking about Harry Potter.
Harry Potter, yeah, Harry Potter movie, yeah. Yeah, right? Are they like magicians and they're like learning? what's the difference between a wizard and a magician? Is that? I mean, what is the difference? Again, I haven't seen it. I still in part of number 4, and that was the only one I've ever seen. I went on a date, I remember, and the person had seen number 4 already, and then we went on the date to see number 4. Why would you pick? I've already said this complaint. Why would you go on a date to a movie you've already seen and are mouthing the words to? How annoying is that? Why do you think there's going to be a second date if you're that's what? This is like obviously well before I'm married, but like. Why would you do that? Like, no, God, no, God, no. There was only one date with this. Like, why would you see that? But it happened twice to me. 2 different movies, 2 different people. It either sounds like that's my thing. That's everyone's got their preference sets. Sounds like either because the other one was V for Vendetta. The person had seen it before and was also mouthing the words to it.
That's somebody's favorite.
Probably, yeah.
That movie?
Well, again, I thought it looked cool. She picked it. I mean, what are you gonna do? And then, obviously, Francisco liked V for Vendetta. V for Vendetta. No, not the same person. No, but it happened twice to me. About I don't know, 2 years apart, 3 years apart. I think it was V for Vendetta versus the other one. I don't know. Yeah. See, there's no homework. Okay. Let's talk about a movie that I would watch. I'm going somewhere with this. Circling back to the stuff I would watch a movie about. Yeah. So if you're obviously not a Kevin Spacey fan, I like Kevin Spacey despite what. Yeah, but how would I know that? I don't care what people do in their private life. I'm sure there's a famous actor right now doing something you would be totally morally opposed to. Why the fuck do we care, dude? They're actors. Like, who gives a shit?
Extraordinary time.
Okay, Bloomberg Terminals, they are doing technical analysis. My concern was if you're like, dude, Scheide, you are not selling technical analysis well. I brought the movie just in case this was going to be a failed lecture, and you said, I want to watch a movie about technical analysis. I brought it.
Very well must know.
This is a technical analyst losing his job because the company is getting rid of the people that, because obviously technical analysts earn about, starting salary is about $125 a year.
Majority of this floor is being let go today.
What you saw right there were rows and rows of Bloomberg terminals, which you would be trained how to use in my new certificate.
Being let go today.
Eric, I'm very sorry. I was working on something, but they wouldn't let me finish it. So take a look at it.
Okay, we got suspense here. He's basically saying, I've done a technical analysis and I've created charts, I've done candlesticks, and I've determined what I think the appropriate price should be for certain stocks. This guy's saying, dude, I was working on it and I almost got the solution, and then they fired me. And then he's saying to this other guy who didn't get let go, here's what I've worked on so far. See if you can figure out the rest of it.
Be careful.
So while you're watching midget movies, I'm watching this. That's what I'm saying. Whatever, you know, in wizard movies, magicians. Wait, doesn't that one guy, by the way, and then in that magic movie, doesn't that guy have the pointy hat like a magician or a wizard? What's it? Okay, someone type in. What is the difference between a magician and a wizard?
I thought when you said magician, I thought it was the
You see me?
yeah.
Yeah.
Oh man, no, not that. No.
Magician. That's a real person, a wizard.
Like Penn and Teller.
Oh yeah, those are magicians, right?
Yeah, magician.
So wizards are fictional, magicians are nonfiction. You might laugh, dude, but I'm just saying, like, you have to have thought about it a little bit. My question wasn't totally offline, like. Magicians that go to school, and the one guy was hooking up with the other person, right?
Yeah, look, I need you guys to come back up here. Wait a second. Please trust me, okay? I need you guys back here now.
You solved it.
This figure here. Whoa, is that? It gets ugly in the heart. Is that figure right? Looks pretty right to me. There are $8 trillion of paper around the world relying on that equation.
We were wrong.
No, you mean you were wrong. Sir, if those assets decrease by just 25%, that loss would be greater than the current market capitalization of this entire company. How long would it take to clear that from our books? You cannot be doing what you're thinking about doing. Sell it all today. You're selling something that you know has no value. So that we may survive.
So that would mean, right, someone on a technical side has said, I know something that someone else doesn't, and I think, now you have to make a prediction, right, and you're going to take a risk here. You got to be somewhat of a risky person here. I think that things are going to fall, and in this movie, what he's saying is, I think it's going to fall. We're going to get rid of all of our stuff before it actually falls.
There are 3 ways to make a living in this business. Be first, be smarter, or cheat. Look at these people wandering around with absolutely no idea what's about to happen. You're a very important piece of this puzzle. Are you in on this? I can't tell you. People are going to say some very nasty things about what we do here today.
We're going down. And you damn well know we'll be together.
I'm not sure that I do know that. The ground is shifting below our feet. Remember this day, boys. Remember this day.
I do have the movie if we decided we wanted to go down that path, but what do you want to do? I'll actually let you pick. We're at 7-Eleven here. We could start to watch it. We're not going to obviously watch the whole thing. I'm not going to force you to stay here for an hour and a half. But we could watch it till essentially the end of class, or I could go on. What do you want? I'll let you choose. You want movie or more talk time? You pick. You can pick without guilt either option. I will still end up covering about the same amount I still want to cover. You pick. Lindsay, what do you want?
What you want to cover is covered in the movie?
No, but it's a more exciting way of talking about technical analysis, which I'm going to keep talking about.
I don't mean to pick it.
Nope. Right? You probably are wanting something that others might have picked exactly the same thing, and we're just too scared to also vote for the same thing. No. What's my favorite? That's a good question. What's my
Please describe your movie.
What is my favorite movie? Well, I would say imagine a father who's a professor that gets with his son who's also a professor, and they're trying to get a cup. Can you name what that movie is? Yep, they're trying to get a cup before another guy gets a cup.
Is that one of the Raiders of Indiana Jones?
Oh.
And The Last Crusade, yeah.
You could be famous on YouTube.
For describing movies in a descriptive way, yeah. Oh yeah. Yeah, that'd be another way of doing it, yeah.
The movie with the monster that kidnaps the girl that gets married.
And he has a friend that's a cup, talking cup. That's how I described it. I didn't.
That one is more, I want to say,
In line with
What was the other one? Okay, I will admit the one description I had was pretty bad, but I hadn't seen the movie in like 20 years. The one where the Cap becomes the president. I had not seen that movie in 20 years, so that wasn't my fault. That's just me trying to remember a movie I hadn't seen for. I hadn't seen the movie for 20 years. The Disney movie, the only Disney movie I saw, the one where the Cap becomes the president because his dad died.
Oh, the Lion King?
Yeah, The Lion King. I hadn't seen the movie in 20 years. So how's that my fault? Yeah, didn't he? Well, the leader of his country, right? I mean, King, yeah, Lion King, right? Pick your gut form of gut. Really? But you really want to be nip? I mean, did you not get it from my description? Yeah. So am I that inaccurate? Like, really? I don't think I'm that inaccurate. No, but I'm saying I'm not